All right, hi guys. I wanted to follow up. I got some emails after my little vlog post last night, so I wanted to follow up. Okay, here's why I want to follow up too. If you go to the SPY chart, remember yesterday's ID rank was at 37, it's climbing higher to 44. This is on the SPY. On the IWM, whoops, on the IWM, it's roughly 43. Okay, so as you can see, it's climbing. Here's why that's important. Election. So there's two ways you can play this. You can wait till literally November 7th to start putting on some trades. I'm sure IB rank will climb. So there's going to be a move. Bollinger Bands are collapsing and coming thin, like I talked about last time again. And there's gonna be a move. It's almost like a binary event. I don't know if it's going to be to the upside. I don't know if it's going to be the downside. The good news for all of us is that it is a binary event and IV rank. We can bet on IV collapsing. All right. So if you started legging in when or dipping your toes in when IV rank is 35%, you don't have to add more in. You might want to wait till maybe it gets to around 50 before you add more positions. But here's what I wanted to show you. If you go to your trade page on the SPY and this grid page comes up, right? So hold on, it's going to load. If you notice, look here in the white. The white is regular options. The yellow is weeklies. Look, we are now perfect 45 days out to expiration. Okay, so what this means is if you want to be completely mechanical, here's a simple idea for you. And you can just pick one side. I'm going to pick, the meaning one side is you can bet both sides, meaning, well, I'll go back to this study actually. 1 second, and I'll show you what this study did. Okay, this is a strategy I was talking about. This strategy basically doubled the S&P 500 if you just bought and hold. So again, from last night, if you had dumped $1 million in your account back in 2005 and did this strategy using only 250,000 or 25% of your $1 million, you would have doubled the performance of the S&P 500. All right, so what you're going to do is you're going to wait for actually you can just start at the beginning of the year or whatever. So let's just say this is your first day of trading. You'll see that on the SPY there are now 45 days to expiration for the December expiration. You can go to your DOL real quick, type in SPY right here like I just did. Okay, you're going to see IB rank at 44%. In that study, they didn't even look at IB rank. They just started out closest 45 days to expiration. You're going to go to strategies. You're going to go to strangle. You're going to go to short strangle. See this 45 days to expiration. You're going to click on one standard deviation and you're going to go like this. And I'll zoom in. Now, as you can see here, you collected $1.85. You can collect $1.85, okay? And this expires, as you can see right here, in 45 days. So all this study is showing you, okay? All this study is showing you is that you put this trade on closest to 45 days to expiration, all right? From there, you're collecting $1.85. So what's going to happen is you're gonna take this trade off depending on what happens, the sooner, whichever comes first. Meaning, if you collected $1.85, right? That's the most you can make. So if you can make 50% of your max profit, so basically what? Time divide this by 2, all right? If you can buy it back for 92 cents, whoops, I can't really show you guys that here. Here you go. If you guys can buy that back for 92.5 cents or so, buy it back. So you sold something to somebody else for $1.85. If you buy it back for 92.5 cents or better or cheaper, you made 50% of your max profit. You know what I mean? You made money. Or you close this and buy it all back when this gets to 21 days to expiration. No matter what, whichever comes first, take it off. So let's say that happens right after the election. So what if you can collect 50% of your max profit right after the election because IB rank collapses, right? So hold on 1 second. Okay, so let's say November 8th is coming around the corner, right? I'm going to zoom in right here. So November 8th comes, whatever, whoever wins, wins, right? But IB rank collapses. Let's say it just drops all the way back down to like whatever, 15 down here because the election's over November 9th, right? All the results come in, blah, blah, blah. So, you know, the market rises probably because the event's over. So there's no fear. This drops, probably that's because this rises, or who knows if it stays the same. Heck, even if it dips a little bit, it doesn't matter. IV rank will collapse. Well, because here you're anything in the green, you make money. So even if the SPY stays above 198, so even if it drops down to 205, but stays above 198, but IV rank collapses because the event's over, you're still going to make money. Okay, so anything in the green area, you're going to make money. So if that happens, you take off the trade. You're going to buy it back for, like I said, 92.5 cents, right? Now, in this study right here, as soon as they took off a trade, they're going to put back on another trade doing the same thing. So of course, you're not, the next option is not going to be perfectly 45 days away. Well, when you go to Dole and you do that same strategy again right here, it's just going to find closest to 45 days. And by the way, you want to use the regular monthlies. You don't want to use the weekly. So of course, I don't know, 10 days have gone by, right? So when you do this, it's not going to quite line up exactly 45 days. That's okay. It's going to find the closest one. You hit go, right? It'll find the closest one and you do the same thing, right? Now you cannot do this in an IRA because this is what's called trading naked, right? But there's a way you can either buy the wings or whatnot, but this study is just doing it naked like this. Now, this is not technically a golden gecko, and this is not the way I trade. The strategy I've done actually did better, but this is default. This is just great arithmetic. You can do this. Anybody can do this, which is why I'm sharing it. All right. So keeping it now. Again, the only reason why I'm bringing this up is right now it kind of lines up perfect for 45 days to expiration, right? So you folks can go ahead and put on your trades today, and it'll line up and just do exactly what I told you. And then when you buy it back, when you're in Dole, you just click on your position and highlight it. It'll say close your position and it'll close it to buy. You're gonna buy to close it because you sold this to someone else to open it. You're gonna buy it back to close it, and you want to buy it back if this is 50% of your max, or 50% of this amount, so 92.5 cents, right? Per contract. Now, oh, how big do you want to go? Well, in this study, when they did this, it was 25% of your max capital. So let's say you got $10,000, right? When you do this, you want to make sure that you only take up, well, see, I'm in trading, I'm in a paper trade account, but it'll show what your buying power is. So you only want to take up, let's say if you have $100,000 in your account, you want to make sure your trade value, your buying power does not get reduced by more than 25,000, and that's it. Okay, win or lose, you're going to close this trade in when it gets to 21 days expiration or 50% of max profit, whichever comes first, which is why you saw this light blue line here. That's why there was a deep sell-off, because you were doing it naked and you're closing the trade either way. Okay, but hey, you still did better. If you're looking at possibly avoiding the black swan events, then there's a uh, there's a whole different way you can do it. It does involve a little bit more activity, but that's the way I do it because I don't like these, these the tail risks. I like to avoid that. And then I also trade a lot more. But I wanted to share that with you guys because it's something I think everybody should be able to do, and have some fun with it. Same thing on IWM, I believe. Let me go real quick. IWM is less expensive. See, this is $211. If I type in IWM here, right? So roughly half, almost half the price. But same thing, look, 45 days to expiration. So you can do the same thing in Dole. I mean, in Dole. In Thinkorswim, you're just looking at probably out of money around, I don't know, 84% on both sides, the put and call. So roughly around, I don't know, somewhere around here, you want to sell the 107 or 106 or 107 put. So when you go to Dole, you're going to go IWM right here. By the way, you don't have to do both sides. You can do whatever you want. But yeah, so you want to sell the 105, 109 in Dole. That's about 83%. Numbers are a little bit different, but anything like around here is good, see? So you'll be all right. Okay. So, and by the way, if you do it through Doe and you hit your review and send, you can, if you have a Thinkorswim account, it'll sync. So you can actually do your trades through here, which is why I like about Doe because it's visual and I can just, it's just faster. And I like it too because it memorizes what your last trade. You can just do like that. And if you want to change, you can hit, look, you can hit undo, redo, whatever you want. It'll change. Basically do what you did the last time. Okay, so hit clear. You can do a real quick strategies. Go to strangle, short strangle. Yeah, you can sell this. Same thing. You want to take this off half of this. Okay, so if this trade and you can collect 50% or half of this amount before this reaches 21 days expiration, take it off, whichever comes first. Alrighty, I hope that helps. I gotta go. I gotta make a bunch of trades. But any questions, shoot me an email. Questions about private coaching, same email, and I'll help you out. All right, have a good one.